Hi, welcome to Video on Banking, put together by Ben Joergens, Financial Empowerment Officer for Old National Bank. We're going to be talking about financial literacy today in this video. We're going to cover the financial basics, do an introduction to checking, budgeting, saving tips, and money management tips for a college student. We're going to start with banking basics, the nuts and bolts of banking. 5 reasons to use a financial institution include it saves you money, it's safe, it's convenient, there's security, and it helps you save for the future. There are 2 types of deposit accounts, a checking account and a savings account. Checking account has debit cards to go along with them, or credit cards depending on your type of account. Savings accounts don't, and that's generally just a direct deposit and a direct withdrawal. Now we're going to talk about checking. First part about checking is you have to know how to write a check. This is what a check looks like. Henry Wells and Mary Wells are the people whose name are on the account. Right below that is their address, and now we're going to talk about what each of these lines means. The first line is where you put the date. That's the date that you wrote the check. The second line is who you're paying it to. In this case, it's Northwest Electric. The third line is the amount the check is for, and that's numbers. The fourth is the amount the check is worth, but it's in words. The fifth line is signed right before that, and that's where you sign your name. And the sixth one is the memo line, and that's where you put what it's for. So in this case, it's the electric bill. A lot of times, you really want to put what it's for so you remember that, or the person or the place you're writing the check for wants you to write something in the memo line. Now this is your checkbook, and this is where you keep track of all your expenses. So in the first column, that's the number, the checking number. So 382, that's the Northwest Electric check. In the second column, that's the date that you wrote the check, or the date you paid for something or deposited something. And the third column, that's the description of the transaction. That's like the restaurant you went to dinner for, or the deposit, or where you bought your shoes, or the Northwest Electric for that bill. The fourth column is the payment, the debit. That's when you're subtracting something from your account. So in this, the first line, it's $60 for the Northwest Electric bill. And then in the fifth column, we have some different letters, and the number 5, that's D, that's the deposit code. Number 6, that's the ATM code. Not everyone uses these. That's usually if you have a fee associated with that or something. The 7th column is the deposit. That's when you're gaining money. And then the 8th column is balance. And make sure you keep up with a plus and a minus so the balance is correct. And the little line splitting it is so you know on the left-hand side that's the dollar amount, on the right-hand side that's the cents. Endorsing a check. To deposit a check or to get cash from a check, you have to have the name of a person in the back. So the first one is just a blank endorsement. You just sign your name. That way, so whoever wanted to could cash the check or deposit it in their account. The second one is for a special endorsement. That's if you wanted to pay to the order of someone. That's a little bit more rare. And the third one is restrictive endorsement. That's for deposit only. That's this example, and that way it's only that for deposit. You can't cash it. This is your monthly statement you're going to get from your bank. By number 1, that's the name of your bank, and it has the address below. And then number 7 is by the number, and that's what you need to call, or you need to go in person if your statement is incorrect. The second part is for the who it's for. So again, for Henry and Mary Wells, and then their address. Number 4, that's the date. That's usually the date that it was the transaction was complete. Number 3, that's by the deposits. Look at the deposits and withdrawals so they match. And number 5 is the balance at the end. And number 6 is your starting balance, and then your amount of money you had in deposits, the amount of money in withdrawals, charges and fees, and ending balance. So it's very important that you match the date and the description and the amount of money withdrawing and then the balance to make sure it all adds up correctly. Because, and remember, if in your checkbook, we'll talk about next, this is where you're supposed to balance, make sure everything is correct. Does the checkbook match up with your statement from your bill? Do your checks that you wrote, do they match the right number going with the right deposit or withdrawal? Now this is a check register, which is a little bit different, but it's the same idea. You start with a balance of 50, and then you went to Coffee Mart, so you took it out $19.75, and that's how much you had left. Now we're going to talk about some good advice to prevent ID theft. Order your checks from your financial institution. Sign the back of your credit and debit cards and include the words photo ID required. This means that in order for you to use your debit or credit card, there has to be a photo ID and the names have to match. This obviously limits identity theft. Utilize online bill pay through your financial institution. And do not leave your wallet, purse, or in a car in plain view, and lock your valuables at home in a safe or a drawer or a cabinet. Don't give out personal information over the phone unless initiating the call. Also, use a shredder before putting personal information in the trash. Don't throw away pill bottles with prescription information on the bottle. Verify all accuracy on your account information, and update firewalls and antivirus software on your home computer. Always remember, if it sounds too good to be true, it is. So now we're going to talk about the availability of funds in your account, because depending on what type of institution you have, sometimes you can't access all your funds immediately. Most banks make available your funds in 1 to 2 business days. Most financial institutions give you immediate availability of your funds if they're electronically deposited in your bank account by means of direct deposit. So we're going to talk about preparing a budget. Track daily spending, determine income and expenses, find ways to decrease spending, and finally find ways to increase income. So keep track of the daily spending diary. What do you spend money on? I mean, not just bills, but I mean food and clothes, movies, anything and everything. Now here's your monthly income and expense worksheet. So we have the income part first. So you put your wages down, anything you get, child support, Social Security, anything else that's regular, not something that maybe happens like a raise. Don't put that in there. It has to be every single month. Now your expenses. So you have fixed and you have flexible. With fixed, that means you have your rent and your taxes, insurance, car payments, health insurance, everything you have to pay every single month that does not change. It's constant. And then keep a little money for yourself. You have to spend money on yourself every single time. It's usually a very small amount. And yourself could also include if something else happens every single month that you have to pay money for. Flexible is money that you spend every single month, but it's not necessarily always the same amount. So like your gas, electric, and water bills. Those are some things that are really big and that happen every month, but they decrease or increase depending on the month. And good ways to cut down on your expenses is if you cut down on those type things by using better light bulbs or more efficient appliances. Savings. Sometimes you save a lot in the month, sometimes you don't. Your cell phone bill, another huge bill that you can cut down on. Food, car maintenance, and personal expenses. That's where, movies and clothing and anything else. Also, if you have children, you probably want to include like school supplies and stuff like that. But this is just for, an average single person. They wouldn't have to include that. Then you total the fixed expenses and you total the flexible expenses, and then you add them together to get the total expenses per month. Now you have your total income, your total fixed expenses, your total flexible expenses. You subtract the expenses from the income and you get your net income. Now, here are tips to decrease spending and save money, because let's be honest, who does not want to save money? Carry only small amounts of cash with you, and use direct deposit. Control your use of credit cards. You really don't need more than one. Don't shop for fun. That always leads you into trouble and into debt, probably. Take written goals with you whenever you go shopping, especially when you're shopping for big items. Buy only what you need, and just because it's on sale doesn't mean you need to buy it. Use coupons to save money. And use a grocery shopping list to prevent impulse buying. Only buy what's on the list, especially when grocery shopping. And pay bills on time to avoid fees and extra finance charges. And especially so you don't go into debt, only buy what you need, only buy what you can afford. Your Ferrari can wait for a while. Now we're talking about savings. Do you eat out at restaurants a lot? Cut back, eat more at home. Can you cut back on daily expenses like coffee and candy and Starbucks? Do you have any services you really don't need like Netflix? Use direct deposit as an auto transfer to savings. If you get a raise or bonus, consider it extra money. Put it into savings because trust me, there's going to be a day you're going to need a couple of $1,000 for some type of emergency, and that's what you want to have your savings for. If you pay a loan off, make those payments to you. You did pay the loan off. You deserve to reward yourself a little bit. Put at least what your company matches in a 401k plan, because retirement is going to approach a lot faster than what you think. And this, if you put a lot of savings aside now when you're younger, you won't have to worry about it as much when you're older and when there's more of a chance of having to use that money for other things like medical emergencies. Save as much as you can from your tax refund. And remember, you also have to save for college and for other big things, so save a lot. It's better to save it than to spend it. Money management tips for collegians. Well, take control of your money so it doesn't control you. Money is inanimate and is an inanimate object. It should not control you. Determine your financial needs for the future. Are you going to grad school? Are you going to be doing studying abroad? Are you going to be working during the summer? Are you going to be taking classes during the summer? Use a checking account. That's one of the best ways. That way you don't have to carry a lot of cash around you. And research to find the best bank or credit union for you in the local area, especially if you're moving far away. You don't want to have to use the bank you had unless it's the national branch that you had when you lived. Read your financial aid documents carefully and be aware of all obligations. Do you have to meet certain GPAs? Especially if the financial aid are loans, then you want to make sure you are aware of fees and when you have to pay it back by. Keep looking for new scholarships, grants, and opportunities for work study. These are the best ways to pay for your college and for your expenses, and you don't have to pay them back. They're the best way to invest for your future. Student loans are an investment for your future, like I said, but they put you in debt. So try not to use them unless they're absolutely necessary, and then look for the best ones that have the lowest amount of interest and the best plan for you to pay off. Working during college can help you, but make sure it doesn't keep you from doing successful in college, because the whole purpose of going to college in the first place is to do well. Take advantage of the Career Center. It's there for you to find good jobs and internships, especially paid ones. Living in the dorm can be fun but stressful. I mean, food is a large student expense, but if you go off campus in an apartment, you have to pay for rent and you pay for food there too. So find the best one for you that you can afford the most, and that will be the best option. Don't let your friends pressure you into unnecessary spending. They're not the ones that have to live with you living in debt. You do. Maintain control of your credit card. Have one credit card, shop around, look for the best deal, and pay the bill on time. That's the worst thing to do, is when you have to use that money. You'd rather be spending on yourself than instead of using it to pay for fees because you didn't pay on time. Thank you for watching, and additional information about banking can be found at these sites.